We believe in the power of people saving, the power of people in investing. The power of compounding is incredible. And invest for the long term. You have a plan, stick to that plan. If you do those two things, I think you're going to have a great financial life.
Chuck Schwab got his start publishing an investment newsletter in the 1960s. Its popularity with readers led him to launch a brokerage business with a mission to democratize investing. When the SEC deregulated fixed commissions in 1975, many of the biggest brokerage firms raised their prices. Schwab went in the opposite direction, cutting trading costs by as much as 70%.
Chuck lowered his, and that began a 50-plus year journey of bringing commissions down to zero and removing barriers for the everyday investor.
Schwab has built its brand around a simple idea: lower costs and make investing more accessible. Today, clients can trade stocks, bonds, options, mutual funds, and ETFs, and the firm remains focused on building long-term wealth.
I said, Chuck, if we lower fees, we're going to lose hundreds of millions of profitability. And he said, no, we won't, because we'll have more clients, they're going to tell their friends about us, and we'll do more business, and we'll grow, and we'll be successful.
Wurster's path to Schwab was shaped by a deeply personal journey. After working at McKinsey and Wellington Management, he moved his family to California to pursue specialized therapy for his young daughter. Not long after, Schwab came calling.
Schwab had called me about 2 investment businesses that they had purchased and asked me to lead those. I left Wellington for Schwab to lead those 2 investment businesses and then work my way up the ranks over a 10-year period.
Today, Schwab oversees $13 trillion in assets and serves roughly 47 million client accounts. And while market volatility continues to test investors, Wurster says the advice he gives clients hasn't changed.
Our view with clients is success is about time in the market as opposed to timing the market. Over the long run, stocks have had really strong returns and grown people's wealth. We tell clients, own stocks, stick with it, avoid the noise.
And despite Schwab's enormous growth, Wurster believes the company's mission remains as relevant today as it was 50 years ago.
Back when he started the company, unless you were really wealthy, you couldn't invest in the stock market. And now today, anyone with any amount of money can do it.
For young people, many of whom are your clients, they may not remember the fact that commissions were fixed, and therefore you had to pay a reasonably high commission. When the SEC said we get rid of that, why didn't everybody lower their commissions to very modest rates?
It's a great question. It provided the leap forward we needed. We took advantage of the fact that others used that as an opportunity to raise prices. But you're exactly right. Back when the company started, if you had $1 million, you wanted to buy a 30-stock diversified portfolio or create that portfolio, it would have cost you about 1% of your assets. If you had $100,000, which back then in 1975 was a lot, it would have cost you 10% of your assets. So you really couldn't invest, and that move to bring commissions down really set the company on a successful path forward.
Explain to me how you make money when you don't charge anything for a stock brokerage sale.
We believe in the power of people saving, the power of people in investing, and for be able to start young and not have the barrier of paying any commission, it just brings more people into the market.
But let me ask you, let's suppose I call up and say, I want to open an account. I open an account with you, and I say, I want to buy a stock. I want to buy IBM, and I'm going to buy 1,000 shares today. And I buy the 1,000 shares, no commission, and then I take the money out the hour after you complete the sale. How do you make any money on that?
We make money a lot of ways at Charles Schwab. About half of our revenue comes from net interest margin on the cash that you may have for a day or two in your account, just like a bank would by investing that money and paying a lower yield to the client versus what we can invest it at. We do make transactional-based economics as well. That's about 20% of our economics. And those come from commissions on non-equities. So if a client buys a bond, we charge $1 a bond. When a client buys options, we charge for options and futures and things like that. And then the final way we make money, the other roughly 30%, is advisory, asset management and advisory related fees. We often have clients that come to us and they begin to stock trade maybe in their 20s, and they do that through their 30s and 40s, and they get to a point where they accumulate enough wealth where they want the help from someone to guide them in their financial life, and there is a fee associated with that.
Now, you have a lot of young people that trade through you. They have a little money, they buy some stock, and as they get wealthier and they get older, sometimes they transition to more famous names in the investment world. How do you keep people from leaving your accounts, or is that not a problem?
It's a great question, David. 15 years ago, people might have felt like they needed to graduate out of Charles Schwab once they hit a certain wealth level. That is absolutely no longer the case. We have invested tremendously in making sure that anyone at any wealth level, no matter how wealthy they are, can have their needs met at Charles Schwab. And it's fantastic for those people that grew up at Schwab, have been fortunate and generated a lot of wealth for themselves, to be able to find the advice, the expertise around trusts and estates, the access to alternatives that they may want, the more complex lending needs that they have. And we're winning with the ultra high net worth investor because we can deliver all of that at a fee and value that can't be matched.
You have over 400 offices in the U.S., is that right? Something like that?
We do.
All right. Many people are saying we don't want offices anymore. It's bricks and mortar. Doesn't that cost a lot of money?
It does cost money, but we view it as an investment in our clients. What we find is that the client satisfaction scores of our clients, as we measure them, goes up about 11 percentage points when they have a direct one-to-one relationship with someone that they can walk into a branch and talk to. And that's because they feel like there's someone that's sitting by their side, understands their financial situation, and brings their expertise to them. The world has been calling for the end of the branch for years. We're actually continue to lean into building branches. You can do a lot online around understanding if you're not feeling well, but ultimately you end up going to the doctor to make sure, hey, am I doing this right? Am I headed in the right direction? Can I check in with you? And that's what we find how people want to engage with us. They want the best of technology and the best of our people, and that combination puts them on a path to success.
Now, is Schwab a mostly U.S. company? Do you do things in Europe or Asia?
We do have a non-U.S. presence. It's about less than 5% of our business, roughly. And primarily, we're serving investors outside of the country that want access to U.S. markets.
I read that you have $11 trillion of assets under management. That's a lot of money under management. But are you managing for people, or this is money they've left in their accounts and you kind of manage it a little bit?
Yeah, so we have about 12 trillion of assets. We've got
trillion.
about 6.5 in retail business. We've got about 5.5 in our advisor business, where we support independent advisors across the country who want a great platform to custody their assets on. And then we've got the rest is in our workplace business, where we support employers in their stock plan and their retirement plan. I think the success and growth of our business has been about seeing through clients' eyes, doing right by them, great marketing. Chuck started the company. He's always believed in marketing. He wants us to have a brand that people trust and know and can relate to.
Are you charging a fee to manage the money, or is this money that's kind of in the accounts that technically is under your management, but you're not really actively managing it?
Yeah, so splitting into our retail business is 75 to 80% of that is relatively self-directed investors that are making their own investment decisions day by day. They're checking in with us for help around financial planning, trust and estate issues, tax considerations, but largely they're making their investment decisions. And then about 20-ish% of our clients come to us for full service help. They want us to manage all of their assets, to help them plan out their life, to come up with their asset allocation, to rebalance their portfolio, all of those things, and we earn a fee on that. And then the other largely half of our business that sits with advisors, they're with 16,000 independent advisors across our country that are providing advice for a fee to those clients.
So let me ask you, how many total customers do you have?
47 million client accounts.
47 million. So every day, at the end of every day or end of every week, you must get some spreadsheet that shows you what people are doing. Does that show you how the U.S. economy is doing?
Well, when you look at what our clients are doing, they remain invested. Equity markets continue to do well. And I think that's a sign of an economy that's been pretty resilient. If you look at the employment numbers have been fine. They're not, supercharged, but they're not bad. Inflation, outside of some of the oil shocks we've had, inflation has been contained. And so you see stock markets that, over the months have been hitting highs despite some disruption. So what we see from our clients is continued interest in equities.
And do you worry about the Federal Reserve raising rates, which is one people think may happen, or does it make a difference to you if they raise rates or lower rates?
It won't affect our business that much. We'll be fine in either environment. What we do worry a lot about is our clients. And we want the Fed, whether they're raising or lowering, to get it right. We don't care which direction they go, but we want it to be the right direction for the economy that provides employment growth, moderate inflation, and in those conditions, equity markets will thrive. Our clients will grow their wealth and be able to live their financial dreams.
So recently, the U.S. government has set up new accounts, I think they're called Trump accounts, for young people, really children, and they're going to have money managed for them over the years. What do you think of that idea?
I think it's a home run idea. It's going to allow every American born in our country to see the power of saving and compounding. They're going to save for the first time and get $1,000 from the government when they're born. By the time they're 18, if markets go up as much as they normally be, that will be $2,000, $3,000, $4,000. And it's not that the $4,000, and by the way, if they're saving every year, hopefully it'll be a lot more, but just that initial $1,000 may turn into $3,000. And it's not that that $3,000 is going to change their life, but the concept that the $1,000 grew to $3,000 hopefully changes their life. They just also announced Trump IRA accounts. There's 55 million Americans in our country that do not have access to a private retirement plan. And then this announcement is going to allow those individuals to have a way to access a defined contribution plan the way many of us have enjoyed.
And so will you get a piece of that business, you think? Or
roughly a year from now, the Trump accounts will open up to anyone that wants to participate, and we will absolutely support the Trump accounts. We'll have a lot of Schwab clients that participate in Trump accounts, and we can't wait to bring them over to Schwab.
In the prediction markets, which have been very popular of late, do you see a lot of your clients interested in investing, if investing is the right word, or participating in prediction markets?
We're not in prediction markets today. Our stance has been that as prediction markets stand today, 90% plus of it is sports gambling. And I view that as entertainment, and if people want to sports gamble, go nuts, sports gamble. Our service to clients and our mission as a firm is to make clients better off in their financial life. We view sports gambling as, on average, you're going to lose. People are going to, 5% of people take more out of a sports gambling app than they put into it. So 95% of people are losing money, which is counter to our mission of helping people live their best financial life. It is possible in the future that financial events, we could have prediction markets on, but our clients really aren't asking for that today.
So today, based on where you see the economy, are you worried that the war in Iran might slow down the economy, or that the Fed might increase interest rates in a dramatic way, or are you not worried about those kind of external things?
As investors, we are always worried about the issue of the moment, and you could go back through time, and there's always an issue in the market to worry about. Our view with clients is success is about time in the market as opposed to timing the market. Over the long run, stocks have had really strong returns and grown people's wealth. We tell clients, own stocks, stick with it, avoid the noise. I think the biggest challenge we face is just making sure we continue to see through clients' eyes, put the client at the forefront of everything we do.
Let's talk about your own background for a moment.
Sure.
Where are you from?
I grew up in the Boston, Massachusetts area.
Okay, and where did you go to college?
I went to Villanova.
And you were a good golfer there, I gather, right?
Good is being very kind, David. I was a enthusiastic golfer. I did play golf in high school, and actually in Massachusetts, I won the Fall State High School Championship, so I was okay. When I went to college, I did make the golf team. I was a walk-on. Everyone else was on scholarship.
I thought you were the captain of the team.
Well, I ended up being the captain. I think that was probably more about enthusiasm and leadership than my golf skills.
Now, you graduated in what year?
1995.
All right. And then what did you do?
I went and worked for a company that did economic analysis for companies in litigation. And then I went back to business school at Dartmouth.
And after you graduated from Dartmouth, where'd you go?
I went to McKinsey & Company. I spent about 4.5, 5 years there. It was a great place to develop your career and get coaching. And about 5 years into that, we were having our second child born, and we found that she was going to be born with some real challenges. The doctors told us she'd never walk, talk, or recognize us. And I was working, 80 hours a week, traveling all over the world. My wife had a job as a buy-side analyst, and so we were barely making it, the two of us working with one child, with a second child coming along that was going to need a lot more time and attention. I decided to leave McKinsey, and I went to Wellington Management, an investment firm in Boston, where I learned a lot about investing and also thankfully got to have a lifestyle where I could contribute to helping her.
How old is she now?
She is now 20 years old. She's a sophomore in college and doing terrifically well.
Let's talk about your business. When you joined Schwab, you were recruited by a headhunter, or how did you go from Wellington to Schwab?
I ended up at Wellington after 3 years, finding this therapy that had worked for my daughter. After seeing the impact that had on her life, we decided to move from Boston to San Francisco. My wife left her job. I stayed with Wellington, but went from the headquarters where there were 1,000 people and where all the action was to a little 12-person office in San Francisco, and it was never really the same. And then Schwab had called me about 2 investment businesses that they had purchased and asked me to lead those. I left Wellington for Schwab to lead those 2 investment businesses and then worked my way up the ranks over a 10-year period.
So you were there for 10 years before you became the CEO?
Roughly, yes.
How did you take these little businesses and get to be noticed?
A good sort of sponsorship from Walt Bettinger, our CEO, who really took me under his wing. I started with these small businesses. I treated them like they were the biggest thing in the world. And we turned them into a great business that went from not growing to growing, that went from having not great performance to having good investment performance. More of our investment business was added into my world. I did well with that. Eventually, I took on our asset management and wealth business and created an asset management and wealth management powerhouse. We really began to grow our fee-based revenue through that. And I think that, along with, again, the sponsorship of our prior CEO.
So he called you up one day and said, I'm going to step down and I want you to succeed me, or did you anticipate that was going to happen?
As the date grew closer to Walt wanting to retire, I was given more and more responsibility. And so by the time that I stepped into the CEO role, he had given me so much that it didn't feel like I was taking on a lot new. He did an incredible job with the transition, was very giving in terms of providing feedback, giving me opportunity. It was just a wonderful transition.
And so today, you are saying the biggest challenge you face as the CEO of Schwab is what?
I think the biggest challenge we face is just making sure we continue to see through clients' eyes, put the client at the forefront of everything we do. I do not think our business will stray very much if we do that. I'll share a story. The first time I met with Chuck Schwab, I was incredibly intimidated. I had never met someone so successful or so wealthy as Chuck. And I went in to see him about this business, and I knew every number in the deck and how we can make more money and generate more profits for the company. And when I got in there with Chuck, he kept asking me about the fees we were charging. And after asking me about all these fees, he goes, "Rick, we need to lower those fees." I said, "Chuck, if we lower fees, we're going to lose hundreds of millions of profitability." And he said, no, we won't, because we'll have more clients. They're going to tell their friends about us, and we'll do more business, and we'll grow, and we'll be successful.
What do people want you to do in artificial intelligence that you haven't done yet, and what are you going to do in artificial intelligence?
Well, AI will be a real accelerant to our business and will help us in a number of ways. Number one, and what I'm maybe most excited about, is it will help us reach and help a new demographic of client that we couldn't before. We've got branches all over Manhattan that you could walk into and get help from someone. In order to have a dedicated relationship, you have to have $1 million at Schwab. There's a vast majority of our clients don't have $1 million, and many people in America don't have $1 million. And they don't qualify for that dedicated relationship. Using AI, we'll be able to offer them some of the same personalized insights that we're giving every day in our branches and in our dedicated relationships. And then it's providing incredible efficiency to the way we serve our clients.
What's the future? Where are you going to take the company in the next 5 or 10 years?
Our view has always been, if we do what clients want and need, do it at great value with no trade-offs, that we're going to be the place where they want to invest their assets. So as we look forward, I think there's a lot of things that we'll focus on. Number one, there is a bull market for convenience. Clients want things to be easier. They want more of their financial life handled for them. So we're leaning into advice and providing more advice to our retail clients, and that's driving our growth. Clients want more of an integrated financial life, and so we are seeing both sides of their balance sheet. They're wanting those needs met at Schwab, and so we're really growing our lending business, and we're leaning into the basics. Save early. Power of compounding is incredible. And invest for the long term. Have a plan, stick to that plan. If you do those two things, I think you're going to have a great financial life.
So over the last 50 years or so, perhaps the most transformative thing that happened in the investment market is the discount brokerage and then no brokerage fees. Do you see something else that could happen in the horizon over the next 10, 15 years that will be as transformative?
I think the combination of people and technology and the advent of AI will provide the opportunity for many more Americans to invest, to understand investing, and I think that will make a big difference. If you look at the wealth that's been created via investing, and you get to see this in your line of work, the people that have been able to invest and have known that helps build their wealth have had a great ride and now are sitting on levels of wealth that they might not have foreseen.
Observing investors across the board, what do you think is the most common mistake investors make and actually the smartest thing that investors actually do?
I think retail investors have done exceptionally well the last 5 to 10 years, and they've led the market. They've bought all the dips when others, some of the institutions were getting out and expressing nervousness. Retail investors have stuck with it, and their wealth is at an all-time high. I think the biggest mistake people make is reacting to an event and getting out of the market. I think people that stay committed, have a long-term view, they tend to have a lot of success at Schwab, and the retail investor as a group has done exceptionally well and been very thoughtful and resilient.
All right, let's suppose I'm a young college graduate. How do I get a job at Schwab?
We do hire a lot of young people every year, primarily to fill a few different roles. A lot of client-facing roles, either answering the phones, sitting in a branch, helping clients with administrative opportunities, or in our operations area. Those would be three of the ways to come into or technology, come into the company and start, and then find your way from there. We fill about 11,000 roles a year. 55% of them are filled internally. So we really want people to come to Schwab, build their career, advance within Schwab, and have a meaningful career.
So for somebody that is interested in knowing about the financial markets, what would you say are the one or two most important lessons you would take away from your experience in the financial markets?
Save early. The power of compounding is incredible. And invest for the long term. Have a plan, stick to that plan. If you do those two things, I think you're going to have a great financial life.
So do you think Schwab can dramatically increase the size of its business from where it is today?
Well, I think we should be serving every American in our country. And right today we have 47 million client accounts. There's another 100 million Americans we would love to serve. And so I think there's a great growth opportunity. What I love about what we do is we always put the client's interests at the forefront of everything we do. And I know that we're going to do right by them. So I hope more and more people choose Schwab over time because I know we can help them grow their wealth.
Now, suppose the President of the United States is watching this and he says, this is a talented man who should serve his country. Would you have any interest in for any president going into government?
I love Charles Schwab. I would never leave anytime soon for anything else. I love what we're doing. I love the difference we're making in our clients' lives. But absolutely, after I retire, if there was an opportunity, I'd love to help the country. I think this is an amazing country. I see it every day with the 12 trillion client assets that we have. I can't tell you how many times I meet with clients that started a business here in America and now have more money than they ever dreamed of, or made a little bit of money, invested in other companies here, and have made a fortune. We are so blessed to live in this country, and I'm grateful for it every day.